I am very excited to welcome back Andy Schectman as the world descends into chaos and we stay on top of these geopolitical updates. Welcome back, Andy.
Good to see you, Elliot. Thanks for having me, buddy. And you're right. It seems we are sliding deeper and deeper into chaos everywhere we turn. It I think is a growing trend, unfortunately. But it's good to be here with you.
That's why I'm glad we started this show it seems like the right time. It just seemed like everything was kind of unraveling. And based on our last show, we talked about how China's kind of like drawing up alliances, doing oil in non-US dollar denominations. And again, the last countries that have tried this are Libya, Iran, Iraq, Russia. They're all crushed. And so now China's the big dog trying it. Do you have any updates on globally what is happening with these oil dealings around the world? Because it's kind of the biggest story.
Yeah, we had talked before about, just to refresh, about in September, Russia striking a joint military cooperation agreement, as they call it, with Saudi Arabia. It is that same type of agreement that we've had since 1974 that has given the dollar its petrodollar status and the dollar hegemony that has allowed this country to live arguably well above the way that we probably should have as being the world reserve currency. And we talked about how that was a massive deal and speculated what it could ultimately lead to. Subsequently, the day after Saudi Arabia and Russia struck that deal, Nigeria and Nigeria and Russia struck the exact same deal. And so you have the two biggest OPEC producing countries in the world now being jointly protected by Russia. Well, as I surmised, an article came out last week that said Saudi Arabia and China were negotiating to accept yuan for oil that Saudi Arabia would provide to China. This is the first piece of the Jenga castle that you're pulling out, a massive piece. Let's just back up 1 second and say, look, we pushed the Russians right into the arms of the Chinese by weaponizing the dollar, by deciding who can and cannot participate in the SWIFT system. Look, the world reserve currency is not for people to pick and choose who gets to use it. It should be for everyone to use. And once you start to weaponize it the way the US has, you are incentivizing other countries to seek alternatives. And I think that's exactly what is happening right now. So you have China and Saudi Arabia actively right now negotiating to accept yuan for oil. At the same time, we just saw Nigeria, as we talked about, also striking a deal with Russia, just inked a deal with China to sell their oil for yuan. Now, this is the beginning of the end for the U.S. petrodollar status. And I knew it was a big deal in September when we started talking about it. But now when you see Nigeria actually crossing that threshold and selling their oil for yuan, when you see Russia being kicked out of the SWIFT system, which accounts for 10% of all oil exports globally. They are the second largest exporter of oil in the world, the largest exporter of natural gas, all of which has always settled in US dollars. So you cut Russia out, you cut Nigeria out, and if you cut China out, if they ink this deal with Saudi Arabia, the handwriting is on the wall. We grow closer and closer and closer to that moment where things get really dicey, and that would be a massive dumping globally of dollars. Because look, people own dollars, Elliot, because it is the foundation of every other currency out there, because you need to have dollars to buy energy. And it's been that way since 1974, where nearly 100% of all energy settlement is in dollars. You cut off China, Russia, Nigeria, you start cutting off all of these demand sources for the dollar at a time when the US continues to print more and more of them. You have less demand and more being produced. That means a falling dollar. And you have to have rates rise to compensate for it. But those dollars come flooding home at the worst possible time when we're already dealing with high levels of inflation. You throw all of that fuel onto the fire and it becomes hyperinflation very quickly. I think this is real. Look, the West has about 1 billion people, right? That create the economy that we have. the rest of the world 7 billion plus people. And when you start moving away from the dollar and you push all of these people, China, Russia, India, into accepting other payments for oil, when you look at the Chinese Belt Road Initiative, where they're accepting or employing the Chinese digital yuan that is indoctrinating 75% of human population into a new currency. The handwriting is on the wall. We are getting closer and closer and closer, whether it be through oil or the Belt Road Initiative or weaponizing the dollar, putting sanctions on over a dozen countries right now, some shape or form. You are hastening the demise of the dollar. And that is really the important takeaway here. I think it's becoming very real when you see Nigeria actually ink a deal with China. And if you go and mess with Nigeria, you're declaring war on China. That's not going to happen. Not only is China industrializing Africa through its Belt Road Initiative, but they've inked a deal with them. That is not something that would be wise to do right now. So, not to mention Nigeria has already inked a protection deal with Russia. So in essence, you're declaring war on Russia and China. Not going to happen. So you can see when you see Jerome Powell's admission 2 weeks ago that, yeah, well, there's actually room for more than one world reserve currency. He has already acquiesced to the reality that the dollar is being de-dollarized globally. And there are other entities, other countries, large sources of dollar demand that are being lopped off in search of something safer, because I guarantee you a lot of these administrations are saying, well, screw the dollar. If they can impose these sanctions, who's to say we're not next? And I think that's why you have the rise of the CIPS system in China, the cross interbank payment system, which mirrors the SWIFT. And if you look at all the pegs that China has put in place between the mirroring of the SWIFT, the Shanghai Gold Exchange, which mirrors the COMEX, the Chinese petro yuan bond, which enables countries to sell oil and gas to China, natural gas for the petro yuan bond, which is immediately convertible into gold on the Shanghai Gold Exchange. Now you're sidestepping the petrodollar. And then, of course, the Chinese digital yuan, which they've rolled out as part of their Belt Road Initiative, connecting 75% of human population using a new currency that isn't the dollar world reserve. So, not to mention one last thing, you got Visa, MasterCard, American Express all pulling out of Russia. I could see everyone carrying a new Chinese bank credit card in their wallet very soon, half the world anyway, and sidestepping the American credit card companies. I mean, the law of unintended consequences is real. And with the hubris that we have thinking we can do this, it's creating consequences. And I'll just say it again, that the world reserve currency is for everyone to use, not who we say should be able to use it. And once you start to weaponize it like that, you force people to seek alternatives. And I think that's where we are right now.
Yeah, game changing, absolutely. Because again, every time any country has ever tried this, they've been immediately shut down for a reason by the United States, because it's that important to the United States. And so you do have Nigeria. And so I guess the next question is, like, what are the other dominoes to fall? Have you thought about what India will do, what Europe will do? Why would these two join and buy oil from the East and, kind of move away from the dollar? Why would they do that?
Well, first of all, Brazil, Russia, China, India, South Africa, they're all part of the BRICS nations. India is inking deals with China and with Russia, unilateral deals that sidestep the dollar. When you talk about shut down, yeah, I think there's a big difference between Muammar Gaddafi in Libya and Saddam Hussein in Iraq and China and Russia. I mean, it's a whole different animal. And I think that's part and parcel with why Jerome Powell came out and said, well, there's room for more than one world reserve currency. You can't go around being the biggest kid on the block until you get knocked down. And I think when you look at trying to stymie China and Russia in this, it would be a game that would be very foolish to be played. But I do think India will jump on board. I do. I think that You have countries that are embracing de-dollarization. Look at who the biggest accumulators of gold and silver are in the world: China, Russia, and India. That's the kryptonite to the US dollar system. I do. I think that you will see China, Russia, and India embrace a new system, which will further isolate the dollar. And there are countries in Europe that are part of the Belt Road Initiative that are signing on to it. You know, the Belt Road Initiative is the roads and the maritime channels and the bridges, all the things that are being, the rails that are being made, are only going to be patrolled by military and used for commerce. And so you are creating a sort of a mechanism of commerce that, you know, just to begin with, 3/4 of the world population will be using, and the US isn't part of it. And you are seeing parts of Europe on it. You're seeing parts of Europe sign on to the SIPS system. The US is not part of that. So we are growing further and further away from the trend. We are becoming more isolated. And I do think all of those countries will unite in a common in a common venture. And it's not so much against the dollar, it's just a new system that is arising. And I think these opportunistic countries are joining on board because, quite frankly, I think there's a lot of countries out there that are sick and tired of the exorbitant privilege that the US has had as the world reserve currency and mismanaged it for quite some time, really since 1971. So I think you will see those countries sign on.
Wow. Okay. So then let's say the United States is crippled with debt, you know, massive obligations in the dollar, inflation occurs. We have commodity inflation occurring all over the world, right? The cost of inputs of all these, you know, like oil, food. Here's a headline: Ukraine war sparks food shortages in Arab nations as wheat prices soar. There's another headline saying fracking sand is unavailable, so we can't really get the oil out. So we're getting this commodity driven supply chain inflation. What does that mean if the US dollar becomes devalued drastically? What does that mean for, I guess, people living in America?
It means the standard of living decreases dramatically. And I think you're beginning to see, I mean, look, the Fed is now forced to combat inflation whether they want to or not, period, because it's getting out of control. And if they don't combat inflation through, you know, they're talking about 6 or more rate hikes this year alone. If they don't do it, then they lose all credibility as the dollar slides further and further and further in terms of its value. You know, we're already at inflation that's close to 15% if you are real about it and you factor in food, energy, and housing, which conveniently are omitted from the CPI. Just came out the other day that food year over year is up over 12%. So you have 12% inflation in food. You got gasoline that I was just in California where you live, filling up my rental car at $6.50 a gallon, which is just, I've never seen anything like that ever. And at the same time, you have housing, which I don't have to tell you, in California, here in Florida, has doubled in the last year, pretty dang close to it. So those things are omitted from the CPI. You have inflation raging, and the Fed has to do something about it. And if they really try to get tough on it and shed their balance sheet, which, you know, dropping $1 billion rather a month off of their balance sheet, you are going to literally suck all of that liquidity out of the system, and what will be a recession will quickly turn into a depression. So the point of it is that you have a situation where if they don't do something to fix inflation, that it's a complete loss of confidence and credibility in the US central bank. And if they do tighten monetary policy enough to make a dent in inflation, you will deflate the massive bubbles in equities, in real estate, in the bond market, even in cryptocurrencies. And I think in either way, it spells disaster for the market and the economy. Both roads lead to higher interest rates, because the more inflation that's into the system, you have to have rising interest rates to compensate for the loss of purchasing power. Or they just ultimately raise rates themselves by shedding everything off the balance sheet. Dumping treasuries will raise rates. Either way, you have a problem. And that's how far down the rabbit hole we've gone. And this is why I think you see such a trend to de-dollarize. I think this is why you saw the Bank of International Settlements reclassify gold as tier 1 in 2019, and the massive acquisition since 2017, knowing this was coming by the world central banks, because they see that mathematically you can't run from Mother Nature. You can paper it over and give yourself time by kicking the can down the road. But ultimately, there is a price tag that has to be paid. You have to pay your bar tab. And it's getting to that point right now. So I guess the biggest issue, what does that mean for Americans, is that when we start to lose our reserve status, it means that all of the goods that we buy globally from China, as an example, become massively more expensive. We become isolated, if you will, as fewer and fewer people want to accept dollars for their goods, because why would you want to accept dollars for oil or for things that are made in China when by the time you receive those dollars, they've been inflated away so rapidly? And so this is the quandary that the Fed finds themselves in. Either they get tough on inflation, which means letting rates rise, selling off their balance sheet. But when you do that, you have to realize that equities, stocks, in particular, bonds and real estate, are inversely correlated to a rise in interest rates. And they are all at all-time highs that have reached those levels by massive money creation, where 50% of every dollar ever created in the history of this country was done so in the last 2 years, 25% in 2020 alone. And so when you're talking about this massive injection of stimulus, like a heroin addict who's high as hell for the past 2 years, and then you pull the needle away, the economy or that addict goes through some convulsions, and we will have to pay the price. So what it means, much higher prices. I think what we see in that environment is what's called hyperstagflation, which is massively rising prices, hyperinflation. It's the printing press meets the Great Depression, where because of it, you see the rising costs put many, many businesses completely out of business, especially the small and mid-sized mom and pop. The small businesses will just be eviscerated. You see rising costs and little or no productivity and higher taxes, hyperstagflation. And I hate to be the bearer of bad news, but in that environment, I see that as a most certain outcome. Hyperinflation meeting a Great Depression, the worst possible outcome as far as I'm concerned. This is why you buy precious metals, not to get rich, but to get the hell out of the way of what's coming. And you can see, when you see a country like Nigeria actually start selling their oil for for yuan, you've just literally opened the door to the beginning of the end of the dollar as the singular world reserve currency. And when you see Jerome Powell come out and say, well, there's room for two, they see it too. And the fact that the public doesn't see it because of the lousy job our media does telling us what's really happening, they're going to all be caught blindsided by this when it happens. It'll happen on a Sunday night. We'll wake up on a Monday morning to a whole new reality.
Yeah, so the bottom just falls out of the dollar. There's massive devaluation. And so what does happen to gold in that environment? I love looking at the chart of like right when we went off the gold standard with Nixon, and like what happened to gold since, and it just literally exponential. So what do you think happens to precious metals at that point? And also silver.
So I think people need to look at gold as the barometer. And I think you see massively higher priced gold and silver, massively higher priced everything in the wake of a falling dollar. But it's not just that the dollar loses its value, it's how does it lose its value? It loses its value because the dollar is the foundation of every currency out there as the world reserve. If all of these nations start to shed dollars, what does that mean? That means they sell them and they come back home to where they were created. And when that happens, you have inflation already. Now you have massive inflation, hyperinflation at the worst possible time. So you have everything becoming more costly, not just gold, everything becoming more costly, food and medicine and anything that you need becomes massively more expensive because the currency that we are measuring them against becomes worth less, ultimately worthless, which is the intrinsic value of a dollar backed by nothing. It's the paper, it's worthless. So I think, the moral of the story here is that ultimately we see, I think, inflation, massive inflation, eroding the value of everything. And this is why we hold gold and silver, because it will give you protection in the face of a collapsing system. It's not to get rich. It's just that has been wealth for 5,000 years, wealth that has lived through things like German hyperinflation or the Great Depression, and still remained the most immutable form of wealth. Yeah. So look, Elliot, it's coming. And I think that people need to wake up and realize this. It's never been more obvious to me ever. And, I think there's a whole swath of countries out there that would like nothing more than to never own dollars again and to use their own currency or another neighboring currency to purchase oil or to act as a world reserve currency. I think we've more or less have shed the good graces of many of the foreign countries that have enabled us to live beyond our means. I think we have kind of burned bridges, and what you're seeing right now is history unfolding in real time.
Absolutely. You have the finger on the pulse of the gold market. So we talked last week, you said it was exponentially higher demand. Have you just seen it pick up daily in this type of environment, or what have you seen?
Yeah, getting product is next to impossible right now. It's the sovereign mint silver coins are, when you're talking just about anything, we have some Britannias and Krugerrands in stock, but Kangaroos and Philharmonics and Maple Leafs, these coins are going 3, 4, 5 weeks out right now. Getting product is becoming very difficult. You see inflation at the highest level since World War II in the United Kingdom. You see 30-year highs in Germany. You're seeing it in Japan. Everywhere, inflation is rearing its head. You see what Trudeau did in Canada. You see what the U.S. did to Russia, kicking them out of SWIFT. You have countries and individuals thinking, am I next? Look at what's happening to the value of our currency, not just the U.S. dollar, but the British pound, and all of these currencies are being affected by inflation. You have a global awareness, and a global awareness that is leading to a move away from fiat. So I think it's not just here in the US. You have demand for precious metals at all-time highs globally. So you have a larger pool of interest chasing a finite amount of gold and silver at a time when inflation is roaring. Pulling it out of the ground is harder. And supply chain disruptions with transit and shipping and trucking that is creating a nightmare in this industry. I have said publicly for over a year now that the market will define itself by an inability to easily source product, and it's happening in real time. We're doing as much business in a week as we do in a month, and I'm just one company. I think that you will see when the awareness hits the mainstream. People make the mistake of investing after they see it clearly. The move has already happened. By then, you're way too late. The big money is already positioned. You have to be proactive. You have to do things before it becomes obvious. You have to step out on a limb and trust your gut. And if you don't, if you're reactionary, it's like trying to build a life raft when you've already hit the iceberg. You have to have your life raft built, ready to go, and in the boat by the time you've hit the berg. And I think that's kind of what's happening here. You have too many people waiting to see the price confirm their suspicions, but you have a concerted effort by the West to hold prices down, because what does rising gold and silver signal? It signals a frailty of the dollar. It is it allows you to lift the skirt of the dollar and or look behind the curtain and see that, the wizard is just a little old feeble man, and it's not the big mythological creature that we thought it was. And I think rising gold and silver are the kryptonite or the antithesis of dollar strength. And so they've done all they can to hold it down through levered futures contracts, to the point where a company like Bank of America is short 800 million ounces of silver. I mean, under what rationale would any bank be short over a year's worth of global production in silver? And at a time when currencies are being shed and precious metals are being accumulated, the concerted effort to hold down the price of gold and silver will lose in a spectacular fashion. The only way you can successfully manipulate a market over time is to push it in the direction it's going. And you try to hold back a global tsunami of demand, not only monetary demand, but look at what you need silver for in industry, in digital, in electronic, in anything that conducts electricity, in solar. Just between solar panels and electric vehicles alone in 2022, it is estimated that we will go through over 200 million ounces of silver just in that alone. Then you throw into it military, where 500 ounces of silver are in the tip of every Tomahawk cruise missile. When you look at all of the things that silver is used for in industry, and a global renaissance in monetary demand, you see a depleted asset that is massively needed in industry, in an expansive industry. You look at gold as really the main benefactor of central bank outflows of dollars. So you look at all the banks that are shedding dollars and accumulating gold: Bank of Turkey, Bank of Poland, Dutch National Bank, Bank of Austria, Bank of Hungary, the German Bundesbank, Bank of China, Bank of India, Bank of Serbia, Bank of Russia. They're all dumping dollars quietly and using the manipulated COMEX price to accumulate copious amounts of gold and silver. It allows them cover to de-dollarize. Why do you think the Bank of International Settlements, the central bank in 2019, quietly whispered to the world, yeah, gold is now the world's only other tier one reserve next to US dollars? Why choose them instead of special drawing rights by the International Monetary Fund? Why not euro or something else? Why gold? And why have the central banks been massively accumulating it? Why are we seeing such a drawdown off of COMEX and off the London Metals Exchange? Massive deliveries of gold and silver. In silver alone this last month, 50 million ounces were taken off of COMEX. 50 million ounces were taken out in 1 month. So, I mean, where's all this going? Who's got the pockets deep enough to de-dollarize to this degree, and to do so without anyone in this country really having a clue? Why? Because people are misdirected very easily by price. If you are able to misdirect by price, you can create a perception of reality. And that's what is happening, until one day people wake up and they let go of the short, and bang, it's way the hell up here. And people will look at it just like they do Bitcoin and say, shit, I missed it. It got too expensive. And that's what will happen, because people are waiting for validation. And that's the dumbest thing you can do in investing. Once it's validated, you've lost. Buy low, sell high. Remember, it's hard to buy low and it's hard to sell high. You have to trust yourself and your conviction. And if you wait for the validation, you've lost. And that's the part about investing people don't get. And that's why so few people ever do well in investing, because they move after the crowd has already moved. You're chasing the bandwagon down the street instead of driving in it. And driving in it takes some courage. It does, because it goes against conventional wisdom. And if these aren't unconventional times, I don't know what the hell are. And if you don't realize, not you, but people out there don't realize that unconventional times call for unconventional thought and unconventional action, then you will be what everyone else is, and that's a victim. If you are not contrarian right now, you will be a victim. And I think it's time to wake up and look at what Nigeria just did. Look at the negotiations between China and Saudi Arabia. Look at the Bank of International Settlements reclassifying gold as the world's only tier one reserve asset next to dollars. Look at the massive acquisition by the banks accumulating gold over the last several years. Look at the pickle that the Federal Reserve is in, backed into a corner. If they raise rates, they blow up the whole system. If they don't raise rates, they lose all credibility. where are we, Elliot? These, as the title says, these are scary times, man, and chaotic times. And I don't say this with glee. I don't say this to force people into buying precious metals out of fear. I say it out of, I've been saying the same damn thing. Look, I own a precious metals company that did over 500 million in sales last year. I don't need to be doing these interviews, these podcasts to get out there and make myself feel good. I don't. I do it because I feel I am in a position that allows me the privilege of being able to say this stuff. And I think it's my responsibility. And I hope if I help one person realize that wealth is something that needs to be reevaluated from time to time. And I choose to fall back in these times of chaos and uncertainty on the one form of wealth that has outlived, as I mentioned, 2 world wars, German hyperinflation, the Great Depression, and every pandemic, and still is immutable wealth. And I think people would be well served to think along these lines, because whether we see massive inflation, which I think we will, or the antithesis of that, and that is massive deflation or depression, which is what they're trying to stave off with the printing press, gold and silver are the place to be. Now, everyone understands why to own metals in an inflationary period, but in deflation, gold is the only asset that is not simultaneously someone else's liability. There's no counterparty risk. And if everything is deflating and you see a massive depression, counterparty risk becomes the term of the day, the term du jour, because you do not have confidence, and rightfully so, that the counterparty has the ability to perform. And so, it's a lot bigger than people think, because if these things happen, if rates really rise and you see things blow up, what about the pension funds or the insurance policies? Where do the insurance companies invest their money to pay their return on their annuities and life insurance? In bonds and stocks, period. You got all these federal pensions and government pensions and city pensions and insurance policies that back the whole system. I mean, you want to talk about the Great Reset? Here it is. And if we were to start a story right here, Chapter 1, Nigeria signs deal with Saudi Arabia, Nigeria signs deal with China. Russia protects Nigeria and Saudi Arabia. Saudi Arabia in talks with China to accept yuan for oil. I mean, you could write from chapter 1, and by chapter 3, the whole thing blows up. The rest of the book is how do we recover from there. So you keep hearing about this Great Reset. Here it is on a silver platter. Everything that is considered wealth in this country is inversely correlated to a rise in rates. The Fed is doing all they can to keep rates from really rising. They're talking a tough game, like we're going to raise rates. We're going to shed assets off our balance sheet. Okay, well, I don't think they will. I think they'll be forced to. They're not going to. The market will force their hand, and they will do all they can to hold it back, which just creates more inflation, which just destroys the dollar more. Here is your Great Reset. All assets collapse, including the value of the dollar. Interest rates spike enough to blow it all up. You start over with a new central bank digital currency, and there is your Great Reset. We are closer to it than people have ever even imagined. And I will tell you that what's happening with Saudi Arabia right now is the linchpin to it all.
100%. And the scary part here is that the Federal Reserve and the government can't step in anymore. There's a sovereign debt bubble. People think they can always just step in like they've done for the last 20 years. Not anymore. That's the problem, is that if the dollar has no power, then the stimulus power goes away. So where can people go? You said you still have product available. If they're interested, where can they go to buy more metals from you?
Send an email at info@milesfranklin. Make sure and put in there the early stage investor. Elliot sent me, however you want to put it, Nation in Chaos, whatever you want to put in the subject line so that we know that it came from you. I will guarantee them the very best price in the United States. Personal attention, if they want to speak with me, say, please forward to Andy. I will, or they'll get one of my senior brokers who I've trained all myself, most of which I've known my whole life. Go back to elementary school with half of my brokers, friends that I consider family. We've never had a customer complaint, Elliot, and in 32 years, your listeners won't be the first. But info at Miles Franklin. Request a current price sheet. Our new website's about 3 weeks from being done, maybe less. We're really excited to get that up and rolling. But until then, we're still old school. Send us an email. We'll send you a current price sheet, answer any questions that you have, and make it a good experience. I can assure you that much.
This discussion is for informational purposes only. Please consult a certified financial planner when making any decisions about investing. And do your own research before making any decisions. Investments are risky, and you can lose lots of money in them.